Right. So we have discussed yesterday regarding the expenditure, whether it can be allowable expenditure or not allowable expenditure. If allowable expenditure, it doesn't affect the taxable profit, and if it is disallowable expenditure, we have to make adjustments, right? Uh, Disallowable expenditure. In calculating income from any source, following are not allowed. Domestic expenses. Domestic expenses mean the personal expenditure and any tax payable under this act or the specified act. Interest, penalties, fines, and due to breach of any contract, any or breach of any law. Expenditure incurred in deriving exempt or final WHT amount. Retirement contribution is not allowed, but if that fund is accepted by, approved by Commissioner General of Inland Revenue, that can be allowable expenditure. Dividend is not an expenditure, therefore we can't deduct. Retirement expenditure and outlays are not accepted. And reserves and preservation also not included in the allowable expenditure. And in expenses incurred on lotteries, betting, or gambling, unless in the course of conducting such business. Right. Today we will discuss in deep about domestic expenditure. Domestic expenditure, I mean, simply called personal expenditure or housing, home expenditure, like that. Right. Where an individual incurs expenditure for himself. It clearly says himself means personal, right? Personal expenditure, right? Himself, personal expenditure. And so that personal expenditure includes in maintaining him, including in providing shelter as well as meals, refreshment, entertainment, or other less activities. Like you are the business owner, you are running business, right? For maintaining yourself, even though you are the owner of the shop, you have to spend for you to maintaining yourself. Say you need today daily breakfast, you need everyday lunch, you need dinner, clothing, right, vehicle, refreshment, entertainment, fun, cigarette, beer, like that. So this kind of expenditure is the personal expenditure. So he can't or you can't charge this expenditure into the business, right? And for commuting from home, right? Commuting, so you are coming from your home to the office, office to home, that kind of expenditures. In acquiring clothing, right? You are getting clothes. You have purchased tie, coat, blazer, trouser, that kind of things. That kind of expenditures are not included as disallowable expenditure, because that also he spent to maintain himself. The purchase of clothes, including shoes for him, other than clothing that is not suitable for wearing outside of the work. Say uh, you have bakery, right? You are the owner of the bakery. Uh, you know that uh, for the bakery, there's a special dress code there. Dress, right? There will be a different head in your head, and there will be a different uniform, right? Hand gloves, uniforms, some sort of skirts like that, right? Shoes. So this kind of uniforms are not suitable to wearing outside. You can't wear this cloth for wedding function, or you can't use that cloth for outside purpose. You can't wear this cloth and you can't go to worship places. You can't go, right? So that's cloth is special only for that particular workplace. For that kind of uniform expenditures can be considered as a business expenditure. If so, we can deduct from the profit. Therefore, it's an allowable expenditure. In educating him, right, other than education that is directly relevant to a business conducted by him, and that does not lead to a degree or diploma, right? You are the restaurant owner. You are the restaurant owner, so you want to improve your cooking skills. So you can register for a course, cooking, right? Short courses in cooking, certificate course in cooking, right? Bakery. So that kind of courses you can follow, but that courses cannot be leading to a degree or diploma. Say for example, you are the as I told you, you are the bakery owner. You can't register for uh, sorry, you can yeah, you can't get if degree on that course. If you spend any amount of money to get a degree in bakery, right, that amount cannot be considered as a business expenditure, right? If you are going for a cake making course, that is not degree. Course fees is 100,000, no issue, because that course is relevant to your business, and also that course is not providing degree or diploma, short course, right? So this kind of courses are business expenditure. And if you are doing a bakery but you are going to get an MBA in accounting, no, or master degree in accounting, BSc in accounting, no, that kind of expenditure cannot be considered as business expenditure. And in paying any personal debts, right, personal debt, say you have taken a personal loan, you have taken wedding loan, you have taken vehicle loan, right? For that loan you have paid taxes. So that kind of loans, interest cannot be considered as business expenditure, but it considered as a domestic expenditure, personal expenditure. Therefore, he can't allow to deduct that cost from their profit. So in paying any personal debt, including credit card debt of the individual, and in paying interest incurred in respect to money borrowed himself and used for himself, right? Any personal, right? This is about interest. This 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 point is about loan, right? Paying any personal debt, right? Principal amount, debit card, right? So debit card payment is not an business expenditure, right? It's a business expenditure. It's not a business expenditure. The simple formula is, if the expenditure is connected to business, that the expenses can be deductible. If not, it will be considered as a domestic expenditure or other expenditure. And where another person incurs expenditure in making payment to or providing any other benefit for an individual, right, to another person, right? Another person incur expenditure in making payment to or providing any other benefit for individual, the expenditure is domestic, right? So the same expenditure is incurred for the employee, not for the owner. This expenditure is spent for the employee, manager, right? For maintaining manager's clothes, right? It's coming under the manager, but it's paid not to the owner, it's paid to the employee, right? So in that expenditure cannot can be considered as a business expenditure when the payment or benefit included in calculating income tax of individual, right? The manager, right? You are paying this kind of expenditure to a manager. The manager should include that benefit into his income tax calculation. Income tax calculation, then this expenditure cannot be considered as a domestic expenditure. The individual provides consideration of an equal market value for the payment. Say the equal market value. The name is a motor vehicle, right? Or motor car. Motor car is rented out from third party and it's provided to the manager, right? This expenditure is domestic expenditure. However, this payment to the employee, and that employee will be pay tax for this. That time he can deduct. The expenditure of the amount of expenditure is so small as to make it unreasonable or administratively impracticable. Say tea expenditure, canteen expenditures, canteen charges, and electricity charge, electricity for staff home, or welfare expenditures. It cannot be divided equally or any other appropriate method. So that kind of situation, it cannot be considered as a domestic expenditure. In these situations, A and B above cover any interest incurred with respect to money borrowed by an individual and used for himself or another person has incurred expenditure in making interest payment for the benefit of another person, as the case may be. Right? We can. It's not important for you. Right. Taxes to be disallowed. So first we have discussed about this just now. First point, okay, we have discussed. Second point is about tax payable under this act. That is in 5.34, taxes to be disallowed. Right? Income tax under this Inland Revenue Act or any other tax, similar tax payable to another country. So like Sri Lankan Inland Revenue Tax, in USA there is another income tax. Right? In USA, if he paid income tax, he can't deduct as an expenditure. Right? And economic service charges, ESC, VAT or NBT, National Building Tax on financial services, crop insurance levy, and super gain tax, bar and tavern levy, casino industry levy, mobile telephone operator levy, satellite location levy, dedicated sports channel levy, and mention tax. So this kind of taxes cannot be considered as allowable expenditure. These expenditures are not business expenditure. Therefore, it cannot be deducted from its profit. Now we will move to deductions under the special deduction which is specially allowed. When we look at the Inland Revenue Act, right, there are three types of deductions. Right, there are three types of deductions. The deductions will be discussed relevant to all source of income. Generally, deduction of the act falls to the main three categories. First one is general deduction. It's about section 10. Main deduction, it's coming under section 11, and the specific deduction. Right? General deduction is common for all source of income. Main deduction is about in the investment and business income. Specific deduction for business income. Right? So under general deduction, this kind of expenditures come out. Then specific deduction, main deduction in calculating income from business or investment, the following are deductible, right? And specific deduction is about only in business, right? Repeat again. Uh, there are three types of deductions: general deduction, right? Deductions. General deduction is about employment income and other income, and main deduction is about uh, deduction under employment income and deduction. Main deduction on investment income and business income. Specific deduction for business income, right? Deductions which are specifically allowed. Certain expenses are specifically mentioned as allowable deduction. Here, certain expenses are specifically mentioned as allowable deduction. In such a situation, deduction should be made under that specific section rather than considering the general section. Right here, general section. So this coming under the specific section. So under the specific section, interest expenditure, right? Under the specific section. Here, under the specific deduction, interest expenditure allowable for trading stocks, repair and improvement, research and development expenditure, and capital agriculture startup, capital allowance and balancing allowances, losses on realization of business assets and liabilities, deductible amount of financial cost, and business or investment losses. So these are coming under specific deduction. We will focus more on that. Right. Right. Interest expenditure. Interest incurred during a year of assessment under a debt obligation is deductible. Right. Yeah. Debt obligation is deductible. If the money borrowed was utilized for the production of income, right? The borrowed money should be used for the purpose of production of income or acquire an assets used in the business, right? Interest, when we pay interest, once we have taken a loan from bank or other entities, we have to pay interest on that loan. When it comes to the business tax, right, the interest expenditure is allowable on when they satisfy two criteria. The first criteria, the loan should be utilized for production of income in the business, or the loan should be utilized for the purpose of purchasing assets to be used in the business, right? For this purpose, debt obligation means an obligation to make a payment to another person, right? If you are taking loan, it's your obligation, liability, right? Obligation to make payment to another person that is denominated in money, right? That money, that loan should be evaluated in terms of money, including account payable, the obligation arising under deposits, debentures, stock, treasury bills, promissory notes, bills of exchange, and bonds. Right? If you want further information on interest, um, yeah, right. For example, here the interest expenditure is explained under section 12. The interest Right, interest expenditure. The interest incurred during the year of assessment is deductible if relevant debt obligation incurred in the production of income to the extent that A. The borrowed money was used to acquire an asset, purchase of asset, that is used during the year. The asset should be used during the year of production of income. That the debt obligation was incurred in the production of income. Mr. Nimal, example, right? Mr. Nimal is carrying a business of selling computer accessories. He obtained a bank loan and utilized the loan proceed as follows during the year 1819. 50% of, right, he has taken loan. Say 1 million, right? He has taken a loan. 50%, half of the loan for construction of new office building. 25% for payment of salaries to the staff. 25% for his private purpose, right? Private purpose. Listen here, listen carefully, right? During the year of assessment 1819, he paid rupees 300,000 as interest for the loan, right? He has paid loan he has taken a loan 50% for construction and 25%, yeah, 25% for business and 25% for private purpose, personal use, right? The total amount of interest for the period is 300,000, right? Right. We can divide this amount, right? Out of 300,000 rupees, 50% how much? 150,000 and right, 75,000, right? Interest expenditure for construction 150,000, business expenditure 75,000, personal expenditure 75,000. So out of these three, so how much amount is tax payable is accepted? Whether construction interest 150,000 is allowed or not allowed? Business allowed or not allowed? This 75,000 allowed or not allowed? Say we put name A, B, and C. A is for construction, B for business, C for personnel. So what are the expenditures? Interest expenditures are allowable. All 300,000 is thus allowable or not? During the period, interest cost is 300,000. So we have to decide whether all 300,000 is allowed or part of the interest expenses are allowed for the period. Please respond in chat box, or you can unmute your mic. You can talk freely. Please. right? During the year of assessment 1819, he has paid 300,000 as interest for a loan. During the year of assessment 1920, he has sold off his building and paid the loan for the year of interest 250,000. Right? It's another scenario. Oh, right. The office building he has sold in 2018, 19, right? And sorry, 1920, right? And for that year, interest cost is 150,000. During the year of assessment 1890, right? Under section 12, an imam is entitled for a deduction amounting rupees 150,000, right? Only 150,000. 50% of the loan paid as interest on the fund used to construct new building as it used as it is an asset used during the year, right? So this 50,000, this 150,000 is allowable expenditure, right? No issue. You put green light, right? It can be allowable expenditure. This A is allowable expenditure. Then, and permits a deduction for the interest paid to the fund used to pay staff salaries amounting 75,000 is allowed. It's a permit, right? Because those funds are used for the purpose of production of income from the business. So therefore, this business, this salary, the amount received to pay salary is directly connected with business. Therefore, this expenditure is also allowable expenditure. But he is not entitled for a deduction, right? Right? For this 75,000 is not allowable expenditure, right? It's a personal use, not include net, not used the loan for the purpose of production of income. So that amount is used for the personal use. So allowable expenditure, allowable interest cost for the period is 225,000 for that year. And when we look at in the next year, 2019 and 20, interest cost, total interest cost is 250,000, right? But the the asset, the building is not available in 2018-19. They have sold it out, right? Building A is sold out in 1890, not available within the company. Further, he is not entitled for a deduction of 125,000. Yeah, total, right? The loan amount is 250,000. So not loan amount. Interest amount is 250,000 for the period of 2019-20, and this 250,000 is distributed for 50% construction of building, 25% for business, 25% for personal loan, right? The thing is, the asset, the construction building is not available in their periods for the period of 2019-20. Further, he is not entitled for deduction of rupees 125,000 paid interest on the fund utilized to construct the office building during the year of approximate 1920. As such, the building is not used during the relevant year in the right production of income of the business. So this expenditure is not allowable expenditure because the asset is not available, right? The asset is not available. Therefore, how much allowable expenditure? Total allowable expenditure, how much? Total allowable interest expenditure for the period of 1920, how much? How much? Please type your answer on chat box. How much allowable expenditure for the period 1920? Yes, 62,500. Exactly correct. Okay. And also, there is a specific rule, right? There's a special rule. Please listen carefully, right? There's a restriction. Even though it's allowable expenditure, not allowable expenditure, you have clear idea. There's a certain limitation, right? On interest cost. It is called the thin capitalization rule. It is called thin capitalization rule, right? You just read this for 2 minutes. You just read. Right? There's a certain limitation to deduct interest expenditure. Right? In addition to the section 12, the section 18 is also applicable only for entities on deductibility of interest expenses. The section 18 restricts the deductibility of interest in calculating an entity's income on financial instruments. All right, this is called capitalization rule. Section 18 restricts, right? Restrict limits the deductibility of interest in calculating an entity's income on financial instruments. This is called as thin capitalization rule. The rule is applicable as follows, right? There are two categories. First, manufacturing companies, manufacturing entities, and non-manufacturing entities. And third category is financial institution that is not in our scopes. Right. For manufacturing expenditures, allowable financial cost attributable to financial instrument equal the financial cost divided by total cost of financial instrument. Say, I can write it in the whiteboard. Right. Interest cost, total finance cost divided by total cost of an instrument, say loan, total debt into share capital, share capital into 3. This is the formula, right? This is the formula. Total finance cost divided by total debt into stated capital into share capital into 3. If it is non-manufacturing organization, we have to put here 4. If it is manufacturing organization, we have to take 3. If it is non-manufacturing organization, we have to take 4. Right? Right. And any amount utilized, for other entities, allowable finance cost attributable to financial instrument equal total financial cost divided by total cost of financial instrument into total issued capital, share capital in 4. Right? Any amount utilized in the current year may be carried forward up to 6 years, subject to the thin capitalization restriction. Right? Say we will do an example. Right? Uh, right. Company B is a garment factory. Garment factory means is a manufacturing institute, manufacturing entity. Company B is a garment factory and incurs interest expenses amounting rupees 2.5 million in during the year of assessment 2018-19. Right. Interest cost. Interest for the year 18-19 is 2.5 million. 2.5 million. Interest expenses 2.5 million. During the year, right, balance sheet of the company as at 31st March 2019 as follows. And right, here stated capital, share capital, right? Stated capital equal 5 million and the reserves equal 3 million and the long-term long-term loan. It's 30 million. Right. Now we will calculate how much the interest deductible during the period. Assume that this 2.5 million interest incurred for the purpose of production of income, right? For the purpose of production of income. Right, what's the formula? Total finance cost, right? Formula is total finance cost. It should be divided by our total debt into share capital into 3, right? This is the formula. And right, this is the formula, right? We will work out on this. Here the total finance cost equal 25 million, 25 million, 2.5 million, right? Total cost is total finance cost interest is 2.5 million. It should be divided by total long-term debt, right? And share capital equal share capital plus reserves into 3, right? We will work out equal, this amount should be divided by this value, right? And it should be multiplied by this value and 3. Yes, the allowable limit is only 2 million, but actual interest is 2.5 million, right? Actual cost is 2.5 million. We will carry it forward to the next year. How much? We can deduct only 2 million, but actual cost 2.5 million. 500,000 will be carried forward to the next year of assessment, 2019-20, right? Any questions? Any questions, please, you can ask. Any questions? Right. The finance cost attributable to finance institution which is allowable to deduct for the year of assessment only 2 million. Balance 500,000 can be carried forward to the year of assessment 1920 and so on up to 2024-25. It means 6 years, right? 6 years. And deductible subject to same above basis. That means the amount of 500,000 is added to the financial cost that will be incurred in the next year and so on, right? Any questions? Any questions on interest expenses? So can you upload this document? Yes, so I will upload, right? I will upload. Yes, I have uploaded. You can refer it. Right, it's uploaded. Okay, you can. And hmm, next thing is about trading stocks. Do you want singular medium of this version book? Do you want singular medium? So I have copies. Singular medium also. If you want, I can share. Uh, okay, I think it's enough today. It's enough today.